That's right, you're watching Africa Trade and Business. I'm Bronwyn Seaborn. In this episode, we focus on private sector sustainability and discuss what it means and what the key developments have been. That's with Heidi Barends, Head of Sustainable Finance at Absa Corporate and Investment Banking. But first, your news making headlines across the continent. GlaxoSmithKline's Nigerian unit will cease operations. Its UK parent says it's moving to a third-party distribution model for its drugs and consumer healthcare goods. GSK Nigeria, which is the second largest drug producer in the West African nation, has faced increased competition from local companies. It says it's working with advisors to agree on the next steps, and it plans to submit a scheme of arrangement to Nigeria's Securities and Exchange Commission, which, if approved, will see it return cash to shareholders. Diageo has posted a dip in annual sales volumes, largely due to its business in East Africa. The world's biggest spirits maker raised prices on that end to keep up with inflation and currency devaluations. But the move contributed to a 0.8% drop in volumes. Diageo's East Africa business includes Uganda, Tanzania and Kenya. Kenya's shilling has repeatedly hit lows this year amid demand for dollars. That in turn has weighed on the local currency, which has been under sustained pressure from oil importers and the manufacturing sector. Zambia's energy sector is set for a boost after the country inked deals with Britain on clean energy and critical minerals. The UK-Zambia Green Growth Compact seeks to generate private sector investment worth £2.5 billion, and that would go towards the African nation's mining, minerals and renewable energy sectors. The agreement also includes government-backed investments. Zambia is a major copper producer and also has deposits of critical minerals such as cobalt, manganese and nickel. Nigerian President Bola Tinubu has ordered a probe into the central bank. According to reports, the move forms part of the government's efforts to tackle corruption, but no details been provided regarding specific allegations against the bank. The CEO of Nigeria's Financial Reporting Council, Jim Obazi, has been appointed as the special investigator. He has been instructed to take steps to ensure the strengthening of key government business entities and to find out the amount of wealth siphoned by corrupt individuals and establishments. Obazi will report directly to the President's office and has been asked to provide a weekly progress report. The African Water Facility is looking to scale up and create a $500 million urban sanitation fund. That's according to Bloomberg. The unit of the African Development Bank, launched in 2004, plans to tap private investors to help create the fund. It aims to, amongst others, improve sewage systems and sanitation services on the continent and fund projects that collect waste for use as fertilizer. A third of Africa's population lack water supplies and a sixth don't have access to basic hygiene. Well, according to Absa, large-scale investment in renewable energy and supply chain transparency are two key sustainability themes emerging in the private sector. And joining me to unpack this in more detail is Heidi Barends, the Head of Sustainable Finance at Absa Corporate and Investment Banking. Heidi, thanks so much for joining us. So let's start with renewable energy, as it's a key topic here at home, given South Africa's energy crisis that we're currently facing. Situate it for us. Just how much potential is there for investment in this space?
The potential is immense. If we take a step back and look at the history of renewable energy investment in South Africa, it took about 10 years, give or take, to invest and create about 5.7 megawatts of additional capacity from a renewables energy perspective. At the moment, we are working on projects or have been mandated on projects of 2 megawatts already, which is kind of outside the additional capacity that's looking to join the grid. So we have 200 megawatts that we're working on today and another 45 billion in projects that are in the pipeline. So the investment and the appetite in this space is immense. It's really, really enormous.
What price tag does that investment come at? Can you give us a sense of just how much money needs to be put behind these kinds of projects?
It's a very large scale of money. To give you some context of projects that I've worked on, so for about a project that will be 100 megawatts in power, it's about an investment of, say, 1.5 billion rand.
So immense money that needs to come through. I want to know, in your view, what has been the tipping point? Because like I highlight, there is this energy crisis, so we do need power, corporates need power. But how much of the drive has also been, we have to go green? Where do you fall on that scale in terms of the people that you're chatting to? What's really driven this need to invest in renewable energy?
I think it's threefold. I don't think it's one thing, but it's three things that came together very well. So the one was the change in policy that came in South Africa. So previously there was really a limitation on the investment on large-scale renewable energy because of the policy constraints, and that being removed really enabled this market that we've seen develop in the last 18 months, 2 years. So that was one massive driver. The second one is the cost driver, because renewable energy at this point, the tariffs are cheaper than buying power of Eskom, which means that there's also an economic driver behind it. And the third piece is kind of the renewable green story, where corporates are committing to net zero targets, or they're going on their decarbonization journey. And to meet those targets, they need to decarbonize, and renewable energy is one of the very easy solutions to do so. So I think it's all three of those have kind of created the perfect storm for very rapid, very massive investment in renewable energy that's taking place at the moment.
So that all coming together to create this environment where renewable energy is taking center stage. But it's also coming at a time where corporates are quite squeezed. They are facing higher costs. They have to rationalize where they're putting their money, and they're also facing higher interest rates. So from a financing perspective for renewable energy, what are some of the trends that you're seeing emerge?
So that's kind of really driven the captive power space. So we're seeing different methodologies and methods in which corporates are financing these. So the one is that you finance it on balance sheet. So you take the risk on and you put it on, and you carry the risk and the responsibility of the projects completely on your own. And the other massive trend which we see particularly in the mining space, or for very large scale renewable energy users or energy users more broadly speaking, is that they're kind of engaging IPPs or independent power producers, and those independent power producers are then building the projects, and they're signing long-term power agreements to take off that power over the next 30 years, which means they're not taking on the risk, but they're basically having an offtake agreement to have more stable and secure power supply. So that market is growing absolutely massively at the moment, and there's a huge amount of investments that are taking place from that perspective. So we're still financing both sides of those equations. And I mean, the other one is kind of the small scale renewable energy embedded generation, which we also do a huge amount of at Absa.
How nimble does Absa have to be with in terms of the solutions that are being provided? Because it seems like such a fast-paced sector where you kind of have to be on point, right? As it changes, as new solutions come online, as the sector develops and new products come and new people and players come into the arena, so to speak, there's all these things that Absa has to deal with. So just how nimble is Absa in providing what is needed and making sure that the best solutions are out there so that these investments can actually come to fruition?
I think that we're very nimble. I think that one of the things that has been really key is kind of a reframe and a reshape of how we look at big corporates. Because typically we would look at financing a big corporate over 5 to 7 years, maybe 10 at a stretch. But taking a 30-year view on a corporate is something that we wouldn't typically do as a bank. But we have taken a view, and that's kind of nimble and new thinking, to say that we actually have to take a view on the power market going forward and not necessarily on the corporate. And changing the way we look at this means that we can change the way we assess the credits, and therefore we can finance these deals on 30-year power purchase agreements, even though we're taking a view on a corporate. So those are kind of some of the thinkings where we're changing the way we think to enable this market to develop.
Lots of big changes that come along with that. I just want to park the energy discussion now because we're almost out of time and look at sustainable, another key area that was highlighted, and that's improving sustainability across the entire supply chain that you're seeing, corporates really paying attention to that. How are you seeing that translate for corporates?
So it's been really interesting, and this might be one of the trends that is actually coming more out of the global north, but it's impacting the global south. And that's kind of taking the view that very large multinational corporations are now being held accountable by activists in the global north for their entire supply chain from end to end. So it's no longer the small piece that you're responsible for, but it's saying that as kind of a consolidator of power, you're responsible for your supply chain from end to end, which means that we have clients that literally, if they can prove where a cocoa bean came from what specific farm, and that the treatment of that cocoa bean, the labor relations, the environmental practices, that everything is sound and sustainable, then that has value for that multinational corporation. So that's a trend that we're seeing, which means like for example, in the paper and pulp industry, you know, the likes of Sappi or Mondi would be looking at certification of the type of produce and the type of wood pulp that is going into their processes, so that they can provide that certification onto their ultimate product to give comfort to off-takers and to customers in the long run. So that's kind of the trends that we're seeing, is that sustainability is really hitting right to the end of the supply chain, end-to-end view. And it's no longer taking a siloed view that was in the past, which is changing the way decisions are being made. And it's also changing the data that's required for companies to provide details and transparency on the products that they provide.
It sounds like an admin headache, really, but it's not. It's a lot of opportunity within that value chain, right?
Yeah, absolutely. And I think that the thing that gives us comfort is that obviously this takes a lot of energy and time. And the best way that this can happen is that the people that have the resources are investing those resources to support the people that don't have the resources. So in the best cases, which are some of our clients that we've seen, is that they're taking their resources and they're pooling them to assist the small scale farmers to provide the certification or to be more informed, to have the skills. And that really means is that they're taking their resources to drive the best behavior within their supply chain without externalizing those costs onto the smallest players.
And that's really how you want to see ESG at work, right?
Absolutely.
Well, on that note, Heidi, let's leave it there. Thanks so much for your time today.
Thank you.
That was Heidi Barends, the head of sustainable finance at Absa CIB. And that's where we leave things for this week's episode of Africa Trade and Business. From me, Bronwyn Seaborn, and the rest of the team, it's goodbye for now.